Wall Street analyst expectations of quarterly earnings are basically astrology for the finance world. That's what it is.
Astrology for the finance world.
I mean, is it not?
Yeah, I mean, they're guessing.
They literally, this is what happens. All the analysts sit down. Okay, John, what's your expectation? Joe, what's your expectation? What's my expectation? Then we debate it. Then the media covers it. And there's this whole like little world that plays around. And then you realize that none of it actually matters because the company just is going to perform what it performs.
Is the solution having the company put out their expectations?
I actually think that we should get rid of quarterly earnings and we're going to eventually move to a system where there's real-time data.
Yeah, real-time data, because you still need that transparency. It's more of just figuring out a way to get it in real time.
Well, right now, what ends up happening is, so I'll give you two examples. Bitcoin, Ethereum, et cetera, all these assets, you can see real time. We just talked about moving on and off exchanges. You can tell the exact fees, right? So Bitcoin as a payment network, if you think of that, Bitcoin's payment network yesterday, in the last 24 hours, paid miners $36.2 million. That was the revenue to miners. I know that for a fact. I can prove it on the actual blockchain. You can watch it in real time. Now, what happens if you could actually see Google's revenue in real time, right? That would completely change financial markets in the way that we invest. But that's the world we're heading to. Now, the centralized legacy incumbent companies, they're not set up that way. They don't have the data collection that way. Like there's a whole bunch of issues with it. But this new digital financial system, they're absolutely set up that way. And so I think that a second thing is there's a company that I invested in called Cadence. And what they do is they basically have very granular data. They extended a loan in a simplified way to a restaurant. And that restaurant has point of sale systems at each location. And they actually can see on a daily basis the sales progress of each point of sale system. Now they're using it from a lending perspective and underwriting risk, whatever. But like eventually that's going to be fed into financial markets. If the data is available, people are going to want it.
Of course. So I think one of the solutions, right, is like a real-time dashboard almost where, I don't know if it's only stockholders or people who hold the equity or everyone, but people have access to it and they can see how the business is performing on a real-time basis. One of the issues that comes to mind, though, is like, if people are making and losing money on these decisions and basically the data, what happens if the data is wrong, right? Like a lot of the things, they're verified by other people before their earnings report. They're double, triple checked. There's some probably, magic financial accounting going on to make them maybe look better than they are. But the whole idea is like, if Google comes out and they have this real-time dashboard and people are making, stock picks based on this dashboard and the numbers are incorrect or wrong and they have to come back and correct it, that's probably a big problem.
So I agree. That would be a huge risk. Now we get closer to why is decentralization so important.
Yeah.
Right. If the executive team at Google could do that, right? We're not alleging that they're doing that. But if they had the ability to basically manipulate real-time data that everyone's looking at to make investment decisions.
Well, even if they didn't do it on
problem.
purpose, right?
Yeah, an error.
Yeah.
That would be a huge problem. But if you look at something like the crypto world, where it's all on immutable for most of them, and then Bitcoin, if they're on blockchains, right, where you can actually see in real time, and nobody has control over changing that data, then it becomes something that you can put more faith into, right? Because you can verify. And I think that's the biggest thing is most people, if it was just, oh, trust me, naturally investors, especially on Wall Street, are very kind of cautiously optimistic about businesses and they constantly want to verify things. In the crypto world, what we're seeing is the verification is possible. I think that's why you see so many young people saying, wait, this narrative driven world that we used to live in where people literally would come out and do conference calls. I mean, think about that for a second. 50 years from now, people are going to be like, you guys used to do conference calls every 90 days, and then people would make investment decisions off the conference calls?
Yeah, and people are allowed to ask one question each. You go down the line of the equity analyst. They have them pre-prepared. It's like, it's old. It's
like, that's the equivalent of reading by candlelight. Like, we have electricity now, right? Like, let's rock. Lewis Roberts, shout out. But if you think about in terms of the way that earnings reports are going to happen, it's going to happen in real time. We get an earnings report every second on Bitcoin. In the legacy financial world, there was all of this craziness around Google yesterday. Now,
do you think CEOs and founders would like that more or less? Because I bet that a lot of them hate doing the earnings call, right?
The day traders
would
love it.
But there's also some incentive for them to be able to, command the narrative a little bit more when they're able to kind of project it outside from an earnings call.
I think it would lead to the creation of much better businesses because you couldn't fool people.
Yeah, it doesn't really matter if they like it or not, right?
If you're a good business, you love it. If you're a bad business, you hate it. And what it would do is it would ultimately drive, again, Wall Street has some great businesses, right? The finance world and technology companies, things that go public. but there's a lot of equivalent of shit coins on the stock market, right? We've talked at length about companies that are valued billions of dollars. They have no product, no revenue, but somehow they're publicly traded, raised all this money. It's like, what's going on here? This is a complete
They told
joke.
investors they're going to change the world.
Yeah, and their projections in 2027 are that they're going to make $100 million. Right?
Does that real-time data, though, change it like more of a short-term view almost, right?
I actually think what ends up happening is when you give people more information, the market makes better decisions and it allocates capital more efficiently to the best companies. And when you do that, it ends up being a weighing machine, right? It ends up saying, if you're a bad company, you don't get capital. If you're a good company, you get capital. By giving investors more data, it actually is going to make it a more efficient market rather than a less efficient market, right? Because right now what happens is basically companies have the data, they put their arms around it, and they say, I'm not giving it to anybody for 90 days. Nope, I'm not giving it to you. I'm not giving it to you. And they know if you call a CEO in the private market and you say, hey, what's your revenue going to be this quarter? They got a pretty good idea whether it's going to be up or down, right, from last quarter. And so that company says, nope, 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 nope. And then they do this like this magic trick. Whoo! Here's the data, right? Here's the revenue. Here's the profit. Here, like all this stuff. And literally the stocks react to that. But it just seems crazy. And then on top of that, you can't trade when they actually release the data because they usually do it after the market closes.
Yeah, where only some people have access to.
So seems like a system that maybe isn't so hot.